Hey, this is Matt with PriceActionTradingSystem.com. Today is Monday, November the 19th. This will be our price action chart lesson for today. Unfortunately, I'm doing this for the second time today. I did the first chart lesson, went through the whole thing, got ready to upload the video, and found I didn't have any sound. So I'm having to redo this. So if I'm going to cut this one a little short, probably because this will be the second one today, and I apologize. There wasn't much going on today. We really had this up channel here, and then we had a break of that trend line or that channel and two legs up to a new high. So I really was more looking for a sell off or for us to at least stay in this range. But you can kind of see it was kind of a wedge shape. Um, you really could see this channel here almost, but it really at this point it was hardest because we weren't making it up there. So it looked more like a wedge pattern. We broke out the high side, then we broke out the low side, and then we continued higher. And that's not surprising. I mean, this is kind of a breakout pullback long, two legs down to a new low, and then we went higher. So there's a couple of different ways you can look at this, but even if you didn't see the wedge or the channel up here, you should have easily found these matching highs and, looking that, hey, we're probably at least in a trading range here. So that's what I saw. But let's just start and go over the trades. Let me back out a little bit. The market opened right in, let me see exactly where it opened here. So it opened right in here. I was thinking it opened in one of these two bars, but it looked like it probably opened on this bar. And notice here we're really in kind of a trading range here. You got some matching lows and you got some matching highs. We broke out the top. We failed. We snapped back. We had a first entry long, pull back, that little failed short, and then second entry long. But you don't want to be going long way up here. So when it snapped, when it broke out of there again and pulled back, now you got a second entry short, and it fails and turns into a breakout pullback long. So that was worth, and that's a nice kind of reversal bar that trapped a lot of people. So now it's worth going long right here. And this was a good trade. This was really the trade of the day because any runners were safe on this one, and you could have ridden this actually all the way up to the highs of the days, although you had to be thinking the highs might have been over right here and that we might have sold off right here. So anyway, this was the trade of the day, and it really got quiet and choppy after that, and there wasn't much going on. So let's move on to the next trade. Notice here that we actually touched the upper side of the trend channel, and this I just drew this line off the first couple of bars, first couple of swings. You drag it to the top, and that's where we reverse. So fairly simple to find, following our rules. And you got two legs back that actually broke the trend line. This one's a little tricky because we had all these overlapping bars, but I actually went long above right here, and you see what happened is it snapped back. So if you didn't go long right there, which there's some question that you may not because this is congestion, but the thing is it's congestion at the very lows in an uptrend, so that gives it a little more merit to possibly go up. But like always, it's really a breakout pullback, and you were better off to wait on this breakout and pull back and then go long one tick above that, because that turns into a breakout pullback long, and it's still, a fairly easy scalp, and you didn't get anything more out of that. But usually what will happen is you'll get two legs up to a new high, so you come back down here, and this is kind of a repeat pattern of this right here. And except we did get the little trap. We ticked lower, then turned up, and that's a double bottom, a higher double bottom than this broader double bottom. And so this second entry long is worth taking right here. And again, another nice easy scalp. You couldn't really, it was really too risky to get long up here because you're too close to the highs, and it's not worth it. So you had to take it here or else not take the trade. And it's not the best setup, but it meets our criteria. So if you saw it and you took it, you still, the trend's up, and we did have a break of a trend line, but we really don't have a new high yet. And most of the time it's 2 legs up to a new high, and that's exactly what we got. And those are pretty much measured legs. And so after 2 legs up to 2 measured legs up, let's just see, I'll show you how close they were. There's leg 1, and there's leg 2. It actually came a tick or so short. And so I exited here on this long, and I went short when we went below it. And nice, easy short. Didn't go anywhere really fast, but you still thinking this is going to chop its way probably back down here. And it got close, and then it tried to go higher. But notice by this time, each time we come back, we're making higher lows. These lows are higher than these. This low's higher than this one. This low's higher than this one. So that's a sign that we may go higher. That's, it's a good sign that we could go higher. But I don't like any of these setups here. There's just way too many dojis and way too many overlapping bars, and you're getting too close to the highs. And there's a possible long right here, but I don't like it, and I just think it's too risky. It would have worked. So if you saw that one and took it, I understand why. I don't like it. And really, though, at this point, I did not have this other channel here. I wasn't sure about this channel because we weren't getting to the highs, so it really was more of a wedge pattern. And then we broke higher and we failed, and so I was looking for prices to come down and maybe sell off from here. But again, we broke out the lower side and turned back up. And so I think the wedge actually fits better than the trend channel does here. So, but you can't ignore the fact that when we got up here, it sold off again. So maybe the wedge is there too. But generally, you want to see multiple touches. And if you get the multiple touches, it's down here. And, it still fits, but we well overshot that. So I don't know which ones, even if you didn't see these 2 lines, you still should have seen the other. And there's enough reasons here. You got to, you've got all these matching highs, strong resistance here. We went higher and we failed and went lower, but you can't, it's too much mess here to be going short. You don't want to be going short on this. You should be thinking possibly short, but the fact that we're above the highs and it's holding, and you can see if you move up to the highs, that's holding. So that's leading me more to think, hey, I might want to be looking for a long, but we ended up breaking through there. We pulled back and tested it, and then we turned down. So nice short right there. I'm thinking now we're finally going to get the sell-off, but it was good for a scalp, and that was it. And then we got these, you got all these matching lows working higher across here. Your range is just getting narrower. And you got that 1 tick lower. So this is a doji. It's small enough. It's at the lows to be thinking about going long. And it was a good trade. It was good for a scalp only, though, and then prices pull back and take the runner. So it was a difficult trade, but it fits our criteria, and there's plenty of room to scalp out before you even get to these highs, much less these. And you can see it tested those and tried to sell off it. And really, this kind of sets up as a short right here. So if anybody got trapped there when it turned right back up, you should have been exiting. But you probably shouldn't have got trapped here because there's no reason to enter with all these overlapping bars in the middle here. There's just too much that can go wrong. And you can see it snapped out of the top of this little range here or congestion, turned lower, broke out the low, and then snapped back and went higher. And the thing is, the bias today is up, and so you're better off to be thinking up than to be thinking short. Especially when this trade didn't go any further, any faster than it did. And it just was really slow and choppy. And so past that point, it really wasn't worth trading again. If you saw this channel, you might have wanted to go long here and maybe even here. But, it's by this time, it's just risky to try to get in or out of a trade. And I was done long before that. So I kind of gave up right in here. I said I've had enough for today, and that was that. When we didn't go lower off this, that was it for me. So let's talk about one other thing. Most of you should have seen the notice now that they're going to extend the close. They're still going to close the market at 315. I think I'm understanding this properly. I haven't had a chance to really dig into this yet, but we'll do some more research on it. I'll ask some other traders that are more knowledgeable about these things than me. I'm the price action guy. I understand the price action and I follow it, but when it comes to anything past that, I'm not the expert. So I want to ask some other people that are smarter than me to see what they think. But the fact that the market's going to stay open an hour longer now, how's that going to affect us? Well, I've got some thoughts off the top of my head, but like I said, there's pros and cons to it. So I see, much like a lot of things in trading, I see pros and cons to it. So I don't know whether it's going to be a good thing yet or not. So we'll have to wait and see. I want to dig into it some more. But here's what I will say. This is what I'm understanding, and I hope I'm understanding it right. I think I am, but I'm going to dig into it some more. But from what I understand, they're going to still close the market at 3:15, and it'll be closed till 3:30, just like always. But you don't have to exit until 4:15 is when they're going to switch the days over. So what that means is, I think, is that it doesn't force you out at 3 o'clock or 3:10 every day like they do now to maintain your day trader status. You will be able to hang in through that close and then have another hour to figure out somewhere in there when you want to exit. So we'll just have to see how this plays out. The pros of that are, one thing I think that happens on occasion is that, let's just say the trend's up like this all day. So once you get to 3 o'clock, people have to start selling to cover all those longs from getting long all day. Day traders do anyway. And so you get a sell-off where you might normally have continued to go higher if the market wasn't going to close and you weren't forced out. So, but on the other hand, the real danger the reason day trading allows you cheaper margins is because you don't carry trade through the close, and that's where the big gaps can happen. Let's say the market closes at 3:15, it closes right here, but let's say during that 15 minutes, heavens forbid, Iran drops a nuclear bomb on Israel or vice versa, and I'm not saying that's going to happen or even think that's going to happen. I'm just throwing out examples, so please nobody take that as a political statement and run with it, because it's not. But let's just say something crazy like that happens, and during that 15-minute close, and the market might open up. It may be way down here, it may be way up here, and you get those gaps. And that's the dangerous part about carrying anything through a close, is because it may not open back up where it closed. And that's where you take the big hits. And that's why I like day trading. That's why I moved to day trading, because normally there's not any kind of news thing that can make the market gap during the regular hour, because there's so much volumes during the regular trading day. Not to say that you can get a gap. I mean, if that same bomb dropped, you may get the gap anyway, but there's a whole lot bigger chance that you're going to lose more money on that gap if it happens during a close before the market reopens. Because people have time to think and plan, and they move all their orders and change all their orders and cancel all their orders, and suddenly the market closes right here, but it doesn't open up till it opens back up way down here, 30 points lower, and you take an instant hit and an instant close, and you're in trouble. So there's pros and cons in both, in my opinion. But again, I'm not the expert. I want to talk to some experts, and I will find out, what other traders think. But my guess is we're just going to have to follow it for a little bit and watch it, and that's how you usually learn, new things, and learn what, how new rules and regulations are going to affect the market, by just watching it and trading it and learning through experience. So we'll see what happens, but I guess what I'm saying is I do not have an opinion at this point. I see pros and cons to it, so I'm not going to make a decision at this point. I will wait, and we'll go from there. So, but anyway, I'm going to wrap it up. One other thing, this is a holiday week, so the volume's going to probably continue to be slow and choppy and weak, and doesn't mean that we couldn't have a big run one day, because sometimes you do, even in, on holiday weeks. But most of your New York type traders and the big, the commercials and stuff, a lot of them will start taking off this week, and a lot of them will take they'll continue. The volume will probably continue to narrow the closer we get towards Christmas, and then but generally January everybody comes back. So just be aware of that. I will definitely trade tomorrow, maybe even trade some Wednesday, but probably take off early Wednesday. So we'll probably have a couple more chart lessons this week, but after that, just know that we're closed here in the U.S. for the Thanksgiving, and we'll take Thursday through Sunday off. Won't be back till Monday. So, and again, we may even take Wednesday, just depends, but definitely be here tomorrow. So I will see you tomorrow with tomorrow's chart lesson. Hope you had a good trading day today, and we'll see you next time. This is Mac with PriceActionTradingSystem.com.